Welcome to the TEK2day podcast powered by CEO Radar. It's your host, John Mayetta. We've published a ton of content since our last podcast. I don't have time to review it all. So what I'd like to cover today is yesterday's activity around WallStreetBets and retail investors taking the opposite side of short positions. And there is this, what I view as a misplaced populist movement. The retail investors feel they have every right to take the opposite side of these trades, which they do. But you've got this massive whipsaw in the market. Right, I don't have the positions in front of me, but I read yesterday, I think it was GameStop was up 5,300% over the past month or so. AMC up by some crazy percentage amount as well. And I may have the two returns flip-flopped. I can't remember which is which. But those are the two that have the most volatility over the past few weeks as this retail investor or retail trader versus short seller battle has gone on. And then you've got Elon Musk adding fuel to the fire, which we wrote about him yesterday. People have gone to jail for less than what he's done. I mean, you can read about it at TEK2day. I'm not going to repeat myself on a podcast. But we have what I feel is misplaced populism. Because what regulators did is they put a circuit breaker on and they're halting trading in those two volatile stocks. And retail investors feel like the regulators have done it to protect the opposite side of the trade, the hedge funds. And so now you've got this vitriol that's out there. You've got, just look at the comment section on CNBC, on the YouTube, CNBC's YouTube channel, same with Bloomberg and so forth. Look at Twitter, look at social media. All the vitriol is placed on the regulators. And I'm not one that comes, probably the only time I could think of me coming to the defense of the regulators. You guys, retail investors, ought to be mad at the platforms you're engaging with. Robinhood, Webull, the various trade execution fintech platforms, the legacy brokerage houses, because they sell your order flow. That's the growth engine of their business. They're making a hell of a lot more money off of you than hedge funds, institutional asset managers. You guys don't know what the fuck you are talking about. You don't have a clue. And when the bubble ultimately bursts and you ride it all the way to the bottom, 80% of you guys are going to cry about it and never come back into the marketplace. That's why I get pissed when the Fed enables bubbles. So there are two culprits here. The Fed, who enables bubbles with zero interest rate policy, pumping trillions into the market, not having a clue as to how the economy works. That $3+ trillion didn't help boost the economy. It just created asset bubbles everywhere. It did not increase production. Powell and company are clueless. This laissez-faire, loose policy that's come out of the Federal Reserve and Treasury since the year 2000, and especially since the 2008 crash, is a joke. Call it peacetime policy. That's one culprit. The other culprit are the regulators, and both defending them here and accusing them for allowing players in the financial services market to sell order flow. That shouldn't happen. So if you guys want to direct your anger at somebody, direct it at your service providers. Go to the regulators, say, regulate these guys. They're selling my flow. The Fed's a different animal. They're not going to listen to public commentary. But the Elon Musks of the world, the Dave Portners of the world, I think you guys are sticking it to the man. You don't have a clue. That's all for now.